month. So if I look at the number, I believe 20 to 25% is the sort of fall that it has seen from the highs. But yesterday there were good volumes, there was good action, and the stock was up 10%. Let's check with the management. Sunil Bohra, ED and Group CFO at Minda Industries, is now with us. So let's just talk about the business. There has been a decline in the auto sales almost for 2 to 3 quarters now in a row. When you look at your company, you are an auto ancillary company. How long is the lag effect before which you see a slowdown? Yeah. Is there any possibility that it's only an inventory sort of a correction and growth rates may not slow down?
Hi everyone. I think it's anybody's guess at this point in time. At the beginning of the year, the financial year, we are expecting that the entire financial NBFC issues sort of fading down over the period. But looks like it's not ending. We are not able to see good liquidity in the market. We all appreciate that the auto sales, a large part is through the financing chain in NBFCs. If you go to buy a vehicle, you normally see some representative from NBFC sitting in the showroom, ready to finance you on the spot. So that still has not seen what it was pre the ILFS financing issue. And I think that's what is taking a little bit of time. So that's the key reason. I think none of us is able to predict when we will see an uptick in the volumes, and the uncertainty around the financing actually is continuing, and coupled with the delay in monsoon or various other issues. In fact, at the beginning of the year also we said very categorically that we are not very confident of seeing a significant bump up in the first half of the fiscal, and we do hope that in the second half there should be some buying coming into the market, which people have been deferring, considering that we will migrate soon from BS4 to BS6, and that definitely will come at some price hikes in terms of movement from BS4 to 6. So we are expecting H2 to be a little better, but I think the good monsoon, some resolution in terms of NBFC holds the key. There were some announcements in the budget by the government to give some relief to NBFCs for the short-term financing, etc. I think they are welcome steps. Let's see how these pan out in terms of providing liquidity to those NBFCs.
So, how are you withstanding the slowdown then, Sunil, in terms of, whether it's your product pipeline, any diversification that you're looking at, what's the kind of, outlook you have in order to withstand what we're seeing in the overall industry, even when it comes to BS6, for example? How prepared are you? Do you see an incremental boost to the order book? Just talk us through some of the possibilities there.
No, definitely. As we said that migration from BS4 to BS6 will lead to cost increases, and these cost increases obviously will bring down, percolate down to the auto comp industry as well in terms of the higher prices. In terms of readiness, we are all ready. We don't have much of the products which are impacted, but whatever are impacted like filters and all, we are already BS6 compliant, and we have secured orders from the major OEs for supply of BS6 compliant filters. Definitely it comes at a little higher costs. In terms of there is switches, etc., there is a lot of development going on, specifically with the two-wheelers for BS6 switches, and we are on track, and that work should get over in a quarter or so max. So in terms of our preparedness, readiness, I think industry has spent a lot of money migrating from BS4 to BS6, and we will be ahead of time in terms of readiness, and we are all geared up for the quick launch of BS6.
How much are you investing in newer technologies then? What's the opportunity as well, seen given all these changes in the industry in terms of margins, in terms of growth, what's the potential going forward?
I think in terms of opportunity, as we all have seen in the budget, the government has laid a lot of emphasis on EVs, and that is the future we all believe. I think government also is moving in the right direction, while at the same time it may be too early to predict the penetration of EVs, because as of now a lot of components of EVs whosoever are manufacturing are also imported. The local market needs to be developed, but prior to that the OEs have invested a lot, including us, to move from BS4 to BS6. So those investments also need to be recovered for the industry to start investing heavily into EVs. So while EVs are the future, we all are investing into it. We are looking at in terms of what all new products we can add into our portfolio. Fortunately, we are not directly related to the internal combustion engines in a big way. We have a couple of products which directly goes into the internal combustion engines. So that makes our platform much ready for the next phase of growth. We are working in terms of what new products we can get into EVs. You know that we have been consistently working in terms of increasing our kit value. We have been adding newer products. We are currently working on 3 new products to come in online somewhere in end of the year or early next fiscal. We are also looking at aggressively in terms of what acquisitions we can do, which we can add value and they can add value to us. We are not going behind a top line, but definitely there is something which we feel can bridge the technology gap or maybe faster technology, while we are investing a lot in terms of R&D, in terms of future development. If we can get something readily available, we are looking at so that the time which is spent from start to seeing the production gets shortened. So technology is an area where we are consistently working on, be it in-house or inorganic.
So, okay, so given the growth in value-added offerings, high-margin products, for example, do you see your revenue mix changing over a period of time? What's the outlook, and will that help to sustain a revenue CAGR of about 27% for FY19 to 21?
I think it's difficult to comment what kind of mix we will see in future, but I can comment directionally. So today, if we see our revenue mix is broadly split 50-50 in terms of two-wheelers and four-wheelers. Going futures, we do feel that the revenue share to tilt more towards four-wheelers. The key reason being that there is definitely a good penetration of two-wheelers already in the market, and four-wheelers, the penetration is much below the global benchmarks. Even if we see China or another developing countries, we are way below. So in terms of growth as an industry, we expect to see four-wheelers to grow more than two-wheelers, and that's why we expect our revenue share in future, in medium to long term, to tilt little more towards components supplied for four-wheeler than a two-wheeler.
Okay, and okay, some of your top clients have also been slashing production, quite significantly. Going into H2, are you hoping that things will improve, that demand will improve? You mentioned that liquidity really hasn't eased and you haven't seen any impact on ground. Again, I know it's difficult to comment on a time frame, but what's the sense that you're getting?
I think we are keeping our fingers crossed. As of now, it's anybody's guess. Nobody expected this kind of drop in volumes, which we are seeing post, I think, 2008, 2009. In last 10 years or so, the industry has not seen this kind of severe volume cuts, while we are working a lot towards increasing our revenue share in terms of product supply to our OEs. We are quite confident that this is a short-term blip, because as an industry, as a potential of the industry, medium to long-term growth potential is intact. There is a lot of expectations that the current share of auto industry in the GDP, which is around 7 to 8%, the government itself has laid roadmap towards reaching it to 14%. And the medium to long-term story is intact, while we are into the short-term blip. We do feel that in medium terms, this industry will do much better than what it is today, and it will come out stronger.
Thanks for joining us this morning, Sunil, and giving us a sense of the situation as it stands currently, and Minda gearing up and doing all that it can to keep up with the pace of change in the industry.